Hello everyone, welcome back to the audit and attestation class. In this class, we'll be understanding in detail about the Security Exchange Act 1934. So let's dive into for more detail about Security Exchange Act 1934.
Now we are jumping to Security Exchange Act 1934. So 1934 is for the routine transaction after the first time registration. Objective is to regulate security registration on national exchange like New York Stock Exchange, right? And over the counter stock of the company. Like that means company can also sell their stock directly out of exchange. But nowadays all the public company sell through the exchange only. This is for like very old time. For more than 10 million of assets and 500 or more shareholder of that company. So for them, the Security Exchange Act 1934 is applicable. Security Exchange Act 1934. So registration under 1934 is separate from 1933. So company need to take the registration in 1934 as well. So they need to file registration for 1934 to do the routine transaction in the stock exchange. So first time registration in 1933 and they will be filing all the IPO requirement. In addition to that, to do the regular routine transaction, they need to file the registration with the Security Exchange Act 1934 as well. And this registration is separate than 1933 registration. Make sense? And then what are the reporting requirement under 1934 Act? One is 10K. Do you remember what is 10K?
Annual financials.
Right. How many of you have studied FAR? I'm sure you might have idea of 10K.
Yes, sir.
What is 10K?
Annual report, sir.
Annual report. So every listed company need to file annual report with the SEC in the form 10K. And what is 10Q?
Quarterly report, sir.
Quarterly report. So every listed company need to file their quarterly condensed financial statement along with unaudited. So 10K is audited financial statement, 10Q is unaudited condensed financial statement. That is not the full-fledged financial statement, only balance sheet, income statement and cash flow statement, right? And what is 8K? Any idea what is 8K form?
Is there any significant event that happens? So we need to disclose.
Like for example,
IPO, sir.
IPO, yes, you can say so. Change in director, change in shareholder, any
Amalgamation,
acquisition, any merger, any disinvestment, any discontinuation of operation. So all those material changes, company need to update the Security Exchange Commission, and those all update go in form 8K, right? And then last is proxy statement. Proxy statement is shareholder voting basically, right? These all information company need to file and submit to the Security Exchange Commission periodically, right? And what all should come in 10K, what all should come in 10Q, what all should come in 8K is been defined in the respective regulatory requirement, format and rules. So these are SX forms, right? SX rules and regulation, which provide reporting regulation. That means what all comes in the financial statement, audited financial statement, right? What all comes in condensed financial statement. Their forms and content, what all information that company need to file is comes under the SX form, right? SX reporting and regulation rules. And SK, in SK is the define the form. So in SK, you will get the 10K form format, 10Q form format, 8K form format, or proxy statement. So all these forms and templates comes under the SK rules and regulation. And how to fill those forms are come under the Essex rules and regulation, right? And in ST, you'll get the information how to do the e-filing with the Security Exchange Commission for 10K, 10Q, 8K proxy statement and other information. So these are reporting regulations, requirements, and formats. So Essex are the rules and regulation which provide guidance how to fill the respective form of 10K, 10Q, 8K proxy statement, right? And the format of those respective forms is come under the rule SK, and how to file those forms electronically with the SEC. Those rules and regulations comes in ST rules and regulations, right? Any doubt here? Anything need more clarification? Yeah, Garvit, Kashish, Kush, Sandeep.
सर एक बारी प्रॉक्सी स्टेटमेंट का एक बारी क्वेश्चन.
Proxy statement is like voting of the shareholder in their meetings, shareholder meetings.
Okay.
Right. Now coming to rule number 10B5 of the Security Exchange Act 1934. So 10B5 is an important rule for the Security Exchange Act 1934. It provides the information what is considered as an unlawful act and defense for the CPA. What all act are considered as unlawful and what all defense are available for the CPA in Security Exchange Act 1934. So rule number, like how we have studied earlier, rule number 11 in 1933, right? Same way the explanation has been given in rule number 10B5 of Security Exchange Act 1934 for the CPA. So as we are doing like CPA course, so what all being relevant for the CPA, we should be more concerned about that. And in exam also, those things will be tested for you. Right? So rule 10B5 make it unlawful to use any instrumentally or interstate commerce if that instrument is engaged in a fraud or make a material untrue statement. That means when you are doing any interstate transaction and there is any fraud or misstatement which has been signed by the CPA, then that transaction is called unlawful transaction. The court have permitted the following defense for the CPA. So there might be a transaction in which you are exchanging the security, but those exchange is considered as unlawful because that has fraudulent transaction or misleading transaction. So in those kind of transaction, there might be a possibility that the third party investor may sue the CPA or the company may sue the CPA. So there are certain defense available to the CPA. First one is CPA is not an insurance. So here for all the transactions which are taking place in the security exchange, for that CPA is not the insurer. If there is any fraud commit in the exchange of the transaction, interstate transaction, then CPA is not being responsible unless and until it has been proved that it was misconduct of the CPA, right? Second is CPA has not done anything wrong knowingly. That means the CPA has taken care of all the due diligence requirement of their AICPA code of conduct as well as auditing standard required for the listed company, right? In that case of scenario, CPA is not considered as guilty. Third is lack of reliance and materiality. That means the party who has done the transaction, who has buy or sell the share, they do not have any idea about the financial statement or financial information signed by the CPA. They have not relied on the CPA financial statement. Then that party cannot sue the CPA when they have not relied on the financial statement signed by the CPA. Or next one is materiality. Like we discussed in section 11 also, if it is not material, then you will not be found to be guilty. Last is statute limitation. if somebody has done the transaction which has some misrepresentation, fraud, or any misleading information, then he or she need to file a case against CPA within 2 years from the day it has been found any fraud or error. After that, it would be considered as expired, or statute or limitation is over, right? So same way how we have section 11 for the first time IPO, right? When investor is relying on the financial statement signed by the CPA, so they can sue the CPA. Same way, every year you will be signing financial statement, audited financial statement, you will be submitting 10K, and quarterly you'll be submitting 10Q, right? So in that case of scenario, if the investor who has made the purchase or sale, subsequent purchase or sale, and rely on the financial statement audited or unaudited by the CPA, in that case of scenario, what all investor has the right to sue the CPA, right? And what all defense are available with the CPA. If CPA is not an insurance, if CPA has not done anything wrong, if CPA has done all the act with the due care, and the investor has not relied, then CPA is not found to be guilty. Make sense? This section is completely similar to section 11 of the Security Act 1933. But Security Act 1933 is applicable for the first time IPO, and for the routine transaction, Security Act 1934, and these all are possible defenses available to the CPA under section 10b(5). Right? Any doubt here? So far so good. Section 11, section 10b looks good. Okay, let's jump into section 18. Section 18 of Security Exchange Act. This section further narrow down the scope of Rule 10b(5). Right? So do you remember general rule or specific rule? General law or specific law? When you have a specific law, then it prevail over general law, right? Do you remember that? Interpretation of statute or interpretation of laws is when you have specific rules or when you have specific provision, when you have specific law, then that specific law prevail over the general law, right? Do you remember this from the definition section? Are you guys with me for the day?
Yes.
Or should we do some more questions?
No, sir, we can continue.
Right, okay. So here the section 18, which further narrow down the scope of 10b. That means we have specific section. So when it comes to specific section, then it prevail over the general section. So CPA is liable only for the specific reason. When CPA has done any false or misleading statement filed by the CPA, right? And third party must prove wrong intent of the CPA, and third party must have relied on those false statements, right? In that case of scenario, only CPA will be considered as a guilty. Other than that, like CPA will not be considered as a guilty. So we have learned three sections. Section 11 of the Security Act 19. Section 11 is of which act?
33.
1930,
1933. 10b(5) is of which act?
34.
And 18 is, section 18 is
34.
34, right?